Yeah.
Not everybody's going to have $10,000. But go down to a bank, a local bank that is not local, a chain-type bank, a Washington Mutual, a Bank of America, people that are all over the United States.
Mm-hmm.
So sit down with a loan officer in that place. Sit down and put your money, your $500, let's use that, and put it in a CD.
Okay.
Tell the loan officer what you're wanting to do is borrow against your CD, and I'm wanting to build my credit is the reason I'm doing this. They will loan it to you because they have nothing to lose. They've got the money in the CD. You don't make your payments. They take your CD away from you and get their money back.
Okay.
But you got to ask the loan officer if they'll report it for you, and this is the reason you're doing it.
Okay.
They will in turn give you a check for $500, and you go do it at another bank. And you go to 4 or 5 different banks in a row. It's a little time consuming.
Mm-hmm.
The only thing it's going to cost you to build these 4 to 5 lines of credit is a very small amount of interest, because they're probably going to pay you 2 or 3% if you're lucky on your CD, and they'll let you borrow it for 2% over. So for somewhere around 5% on your money, you can build 4 to 5 accounts that will show up on your credit and get you started.
Okay.
And that's a great way to do it. Now, some other ways to do it is it's harder to do this nowadays, but if you've got a parent or somebody that has good credit, you've got to be very careful. They can put you on as a user on their credit card. Now, people say, my parents are never going to let me have their credit card. Well, that's not what I'm talking about. They can put you and your Social Security number on as a user, and every time they pay their bill, it will show up on yours. Now, you won't have the card, and you won't even have the account number, so you couldn't use it if you wanted to. But you can sometimes piggyback off of a spouse or a parent. They won't let you really do it a lot of times anymore, a friend and stuff. But with family members and people you're tied to, they'll let you do that. One thing you got to be very careful about, make sure the person that you're trying to piggyback off of does pay their bills.
Okay.
If they don't, it's going to show up bad on yours also.
Oh, that's
so that's
true.
Somewhat of a stretch. I mean, if it's your parents and they've been paying their bills perfect for 20 years, they're probably going to still pay them good. But the economy's a little shaky right now, so you better be careful who you try to piggyback on.
That's good. Yeah, I mean, how can one even get access to the report and, see what's actually shown on the credit report so you know what the bureau see?
Well, when we bring a person in, we order their credit report straight from the credit bureaus. You can go online to truecredit.com or Experian.com, Equifax.com, TransUnion.com. You can order your credit bureaus right there online.
Okay.
There is some numbers that you can call, and you can get them for free. You can write a letter to the bureaus if you've been turned down for credit.
Okay.
They'll send you a copy of your credit. One thing you need to be very, very careful about, the credit bureaus, when you go online and order your bureaus, will show you can buy your score. Now, I want to let people know that score that they get online is what's called a plus score.
Oh.
It is not the score you're going to get when a loan officer pulls your credit or a car dealership pulls your credit. I really don't know what a plus score really does for people. I think it's where they can say the average customer has a 710 beacon score, because it's about 100 points higher than what your regular score is. The average score in the United States is a 530 to 620 right now.
Wow.
And so I don't know if it's propaganda that the bureaus are putting out in order to make people feel like they got a higher score, or their scoring system's not hurting people as bad. But that plus score that you're going to pull, don't get real excited about it, because it's not going to be an accurate score. It's always going to be a lot higher than what your real actual score is.
Oh, okay. So where can we actually find the access to the right score, or who pulls the right scores?
If you have a loan officer pull your score, that will be the right score.
Oh, okay.
Now, going to Experian.com, TransUnion.com, and Equifax.com, you're going to get that. You're going to get that higher score. I pull mine every so often just to check on mine. I don't look at the score. If I did, I may have one of the highest scores in the United States. I'd be so excited it's unreal, but it doesn't really mean anything.
Yeah.
It comes down to it. The people you're going to be borrowing the money is going to be pulling a tri-merge or a different bureau that's really going to show what your real score is. And again, that could be up to 100 points difference.
Mm-hmm. So what actually gets shown in the credit report? Because I'm trying to have the viewers understand what each section means and how it's important.
What you can see on the credit report is the items that you have on your credit, the things that you have applied for on credit in the last few years, the balances that you owe on credit, the high amounts, what you started out with, the times you've been late, the times you've been on time, your employment's on there, your addresses are on there, your Social Security's on there, your dates of birth are on there. It tells a story of a person's life.
Okay.
You can go back pretty far on people on credit. Now, again, after a couple of years, the inquiries start falling off. Inquiries are a big deal that people understand. Every time they apply for credit and they just run out and let people pull their credit, it's worth a couple points apiece.
Wow.
The average person has 20 to 25 inquiries on their credit, and at 2 points apiece, that's 40 to 50 points.
Wow. Yeah.
That's a big deal. People say, well, the inquiries, as long as my score is good, I'm not worried. Well, here's the deal. The inquiries that we go in and remove the inquiries is because what if you had a really good score and you had somebody fix your credit so your score is better and you can get a house now? And so you send it in to this mortgage company and the underwriter pulls it and they go, I like this couple. They've got good time on the job. They've got good income. Their credit score is decent. I kind of like this deal. And then right before they buy it, they look at all the inquiries over about 120 days or 90 days before that, and they go, gosh, a lot of people pull their credit. I must be missing something here.
Yeah.
People didn't seem to buy them before. What am I missing? And now they start looking for things not to buy the deal.
Oh.
And people that are out applying for a lot of credit basically are either at one point in time or have been bad or are just trying to charge things up. And they don't want you to get into a bind, so therefore those inquiries are a very big deal.
You are listening to a content-filled interview at Taking Minds to the Zenith. For more interviews with experts just like this one, available to you for free, go to www.zenithpropertysolutions.com/blog.
So in that case, you're saying that having so many inquiries showing on a report is not a good thing. What are the kind of tricks that one can use if you're actually out there looking for some form of credit, but that way inquiries don't show up on the report?
Well, again, don't just be applying for credit to try to get credit. Because let me tell you something. If you got bad credit and you got bad credit, you need to have a reputable credit repair company go in and fix it because you're probably not going to be able to buy anyway. So sitting there applying for things to hope that somebody lucks out and buys you is probably not going to happen. So just keep adding inquiries is not a good thing. Well, if you need a credit card and your credit's decent, go online and really read the fine print about membership fees, annual fees, what interest rates change to. You could be paying 9% on a credit card, which is really not bad. There's some better rates out there, 0% for a while and stuff. But you kind of get in a bind and make a payment a little bit slow one time, maybe not 30 days, but they're liable to get scared and just up you to 30% all of a sudden.
Wow.
Well, that's when people's credit goes bad. They don't understand. You can't do that. Well, you can if you read the fine print. And they get mad and say, well, I'm just not going to pay you, and things go bad. Or that 30% makes the payment so high that the minimum payment that you make, instead of paying it off in a year, it'd take you 10 years to pay it off. So you need to read the fine line and handpick a card. Now, as far as cards go, and this is not advertisement, I've really had great luck, and people have great luck with Citibank cards.
Okay.
Those are a really good credit card. They have some protection for the consumer. All in all, I've just really had a good experience.